Welcome again to our Foundations series, Position Your Company to Prosper. This is part 5 in our series, and we have gone over some really relevant topics to help small business owners and for those of you who are considering starting a small business to set your foundation. So far we've really gone over some things like the pros and cons of starting a business and the types of documents. We've also talked about how to create goals and objectives in your company and how to prepare a budget. And in this video tip series today, I want to give you just some tips about the parts of a business plan and why they are all important. My name is Benita Tyler, and I am the president of TBS USA, Accounting and Tax Advisors, and we are committed to providing you with proven financial management strategies that will help you achieve your profit goals, to minimize your tax liabilities, and to build wealth through entrepreneurship. Now, what I would like to do is start by talking about the parts of the business plan so that for those of you that have already created plans, we're going to refresh your memories about each of the sections and to help you to see why developing each one of these sections adds value in your company. The first tip I want to go over is this first section is the executive summary. And although this section is positioned at the very beginning of the business plan, it is usually written after the other parts of the plan are completed. And the reason that we do this, or it is suggested that this section comes last, is because you are going to highlight the mission and the objectives and the goals of your company, and you're going to do that after you've written those sections in the business plan. What you're also going to include in this section is a summary of the main points from your management section and your marketing, your finance section, and you'll also give some points about how you're going to manage risk in the executive summary. And the reason we do that is we're going to give the readers a preview of what to expect as they read each of the sections that follow. Now, in the description section, here you're going to provide an idea of what your company is all about. You're going to include things like the vision. You talk about the mission, the goals, and the objectives in this section. But here you really want to flesh out the history of your company. You want to include things like the names of the founders, the key officers, how the company got started, and how it has progressed up until this point. If you are just getting started in business, then talk about how the idea came to be and how the mission itself was developed. Now, the next section is the marketing section, and in the marketing section you're going to talk about the company's strengths, the weaknesses, the opportunities, and the threats that you see for your company. And some of the key questions that this section is going to answer are who are your ideal clients, where can you find them, where are they hanging out, so that you can listen to what they have to say and that you can do that research and develop those products and services to feel their wants and needs. And then what products and services are you going to offer based upon the research that you have compiled about your ideal clients? What products and services have you discovered that they actually want and need? And then how are you going to reach them? You want to talk about the marketing techniques and how each one of those techniques that you've decided to use in your company is going to help you achieve your sales goals and your revenue objectives. Now, another part of the business plan is the financial section. And here you're going to be counting the cost of running your business by quantifying or putting numbers to those key assumptions that you made in the marketing and the management sections of your business plan. In this part, you are going to include the pro forma, which is really just projected financial statements, your balance sheet, your income statement, and the cash flow, statement of cash flow, so that you can illustrate how you expect your company to grow over that time frame. Financial projections usually cover about 3 to 5 years, but it really depends upon who you are preparing the business plan for. If it's internal purposes, then 3 to 5 year period usually will be sufficient. But if you are creating the business plan for external users, such as to obtain business lines of credit through a bank or a lender, or even if you are looking at outside stakeholders such as investors, those requirements may be a little different, and you may be looking at maybe a 5 to 7 year period instead of a 3 to 5 years time frame. And then another tip I want to talk about here is the addendum. And here is where you are going to include any supporting documents that you feel is relevant to helping your readers to get a better idea of how you came up with your assumptions, and to give them an idea of the tangible products and services that you offer. Now, some examples, or a few examples, might be your marketing materials, like your brochures or your business cards or copies of your newsletter or your website or things like that. And you may want to also include the research statistics to support the assumptions that you made, and really just give the reader a clearer idea of where those ideas came up. So now that you have a better idea, or now that you are refreshed on the parts of a business plan, and you see a little bit better why they are all important to you in business, I do invite you to connect with us if you need any additional resources or additional consulting with business planning. We are on Facebook. You can find us at TBS USA Accounting and Tax Professionals, or on LinkedIn and Twitter. You can find me. My LinkedIn and Twitter names is Benita Tyler. So as always, I thank you for joining me today. And if you have need of business advice or would like some assistance with business planning and tax tips, check us out at our website, which is www.tbsusa.com.